Hello, Investing Putts with you again. Short week, but thought it'd be good to do a weekly update. Last week I had was a bloodbath for my portfolio, and the virtual SPY portfolio was catching up. But my portfolio had a very nice recovery on Thursday. Mid caps did very well as the jobs expectation of a good jobs number came in, and that happened. So anyway, I'm at an all-time high in my portfolio, up about 9% since I started trading in early January, so 3.5 months ago. That's a 31% annualized return, which would be pretty awesome if it kept up. But I think the market is definitely due for a pullback. So I doubt I'll get 31% annualized. Be cool if I did though. So here's a list of current holdings. No changes this week. I'm long 5 stocks: Dish Networks, GDX, Schlumberger, Walgreens, and Weight Watchers. I'm selling covered calls against those. I have synthetic long positions on Intel and TLT, and I'm trading the poor man's covered call since those are very comparatively expensive shares. I'm selling cash secured puts on 4 stocks: First Majestic Silver, Cameco, Occidental Petroleum, and Wells Fargo. I took a bearish position on U.S. Steel. It's been in a volatile sideways pattern for several months, so range bound between $15 and $26. So when U.S. Steel spiked up to 25, I sold a 26.30 call spread expiring on April 9th for a very nice 2% premium. I had stopped trading U.S. Steel for a while, but J.C. Gilbert has convinced me in one of his videos I should keep playing. So I've got 1 bearish bet and 11 bullish bets. So since I started trading, I've sold 132 options or spreads and been assigned 16 times, or 12.1% of the time. I usually sell 30 delta options, which have roughly a 30% probability of being assigned at expiration. Since I buy back the options before expiration, I would expect the realized probability to be lower than 30%, but not this much lower. So I guess this is a good illustration of the principle that implied volatility is typically lower than realized volatility. And you hear the Tasty Trade guys state that fact. It's the whole reason why option sellers have an angle. So I thought it'd be useful to kind of continually revisit the probabilities just to make sure that I have some kind of an edge. So GDX, the gold mining ETF, gets a lot of interest from people searching on YouTube. I've been trading it for 2 months and I've been assigned 3 times. So the stock has been trading sideways, is actually down about 0.4% over that time period, but though it's been up and down about 10% in different spikes. But my trading gain is actually almost 7%, which is pretty fantastic. The chart shows the share price in blue and shows my cost basis in red. The dots are the strike prices of the cash secured puts or covered calls that I'm selling. So I think this is a nice and fair illustration of the expected returns of the options wheel on a sideways trending stock that you want to keep a bullish position in. So we'll see how it keeps up as the year progresses.